Hello and welcome to another episode of Casual Friday. I'm here with the Duck. We're going to talk about the market, altcoins, AI, which somehow has crept its way into crypto, and the crypto grifters have found a new way to pivot. All of that is very fun. Before we get into it, leave a like on the video if you enjoy these, subscribe. I tried to reply to a bunch of comments last week and we appreciate them, so leave us your feedback as always. As far as admin goes, the show, as always, is brought to you by WooX. Links available in the description below, specifically my long-form article sort of breaking down the partnership and the exchange. One thing that's become a bit tiresome is every week there's this sort of fake controversy, like, oh my god, have you read the Woo TOS and it does this, that, and the other? If you read the article, we're very upfront about the business model and the trade-offs and the exact provisions in the TOS that are controversial, the pros and cons, how to use the transparency dashboard to manage your counterparty risk. Also, and Don, feel free to disagree with me, I think it's a completely reasonable position to say, look, good execution is a good pro, but the con of the current form of the counterparty risk is sort of too high for it to be acceptable for me, so I'm not going to trade there. Like, to me, that's a completely reasonable position, but that's a position that you arrive on upon actually reviewing the evidence, the TOS, the pros, cons, and actually figuring out what tools are available to you from a transparency point of view, an execution point of view, and a counterparty risk point of view, as opposed to just like following someone on Twitter. They say it's FTX 2.0 and that's it, we're scammers. So a bit of a wonky start, but I just feel like, saying links available in the description for the article, yet the same points keep coming up, which we directly knew were controversial, or at least different from how other exchanges worked. So we made a really good faith effort to talk about them in at some length. So if you have funds on there and you haven't read the article, read the article first and then make an informed decision as to whether the pros and cons and the trade-offs are appropriate for you. We think they are. If you arrive at a different conclusion, that's also very reasonable in its current form, pending fee revamps, etc. Odd intro, Don, but what do you think about all of that?
Yeah, I mean, in general, like all the controversies that I've read, right, is mainly about things that other exchanges do the same. They just don't tell you about it. So I'm just kind of like sitting here being surprised that like it's more like people are more freaked out about a risk they don't like they know than one that they don't know. Like that makes no sense to me, right? Like if you have like full transparency, like that's a good thing, and then you can still kind of like figure out whether you like something or not. But if someone just gives you half data, and this is like literally I mean, besides maybe Coinbase, I don't know how they operate, but a lot of the other popular exchanges do like stuff in ways that would kind of make you freak out. They just don't tell you about it. So yeah, I don't know. I'm just here being like, people are gonna be people, and people are gonna be dumb, And but yeah, I do wish that like before people would say something, they would actually go through the available data
Which we've made
available.
very digestible, accessible, if you don't know where to start. That's the frustrating thing, right? It's not even sort of almost worth talking about it in detail, because whatever detail we could go into it in the intro of a show, we've done a better job in this article. So to all of our audience, if if you've signed up, etc., obviously we're grateful for the support, but we want you to do so on an informed basis. So when we say links in the description, doesn't mean just click on the ref shill and make us money. It means go get educated and see if the pros and cons are worth it, and you can come to conclusions, your own conclusions, frankly. So yeah, that's the controversy of the week. Twitter hasn't been fun, but then Rollbit became the main character again, so that kind of died down. Trading venue is always a hot topic.
Oh,
For understandable reasons, I think.
yeah, but I mean, you cannot really compare the two, in my opinion.
No, I don't
Like
think so.
the Robit stuff, and the thing is, like a lot of the people that are shilling Robit are like friends, or at least people in like that I like to engage with on Twitter, which makes this whole thing like a little bit difficult because on the one hand, like I really don't understand how anyone could partner or kind of shill Robit besides the money, right? Like I've seen what they offer, and I kind of like get if you want to make a bunch of money just by not giving a fuck. But other than that, I see very little reason to have anything to do with that exchange. So yeah, I don't know. Like it's a little bit of a depressing thing every time I look on Twitter and I see people shitting it. It just doesn't seem right. But I'm also not an expert. I mean, on Rollbit, I actually looked into it a little bit, and just the surface data is enough to kind of keep me away. And that's coming from someone that had, I mean, I've talked about this on the previous stream, that like if we went with Rollbit as a sponsor for the show, we would have made a considerable. I mean, it would have been considerably more. Let's put it that way.
I mean, what, 5x, 8x, as much, roughly?
Yes,
I don't know, ballpark?
8 to 10x.
Right.
Yes. And then the thing is, like with Rollbit, right, the fees that you get from ref links are so astronomical that, like, this is just talking about the base fee for like getting sponsored, right? The ref links that you get on Rollbit are like insanely high in comparison to a lot of other things. So yeah, I don't know. I don't see it, right? And I would have liked to see it, because then you make a bunch of free money by just like signing with them, right? Like if they're the second coming of Jesus, just handing out free money, fair enough. But I just don't see it. So I have a little bit of a problem with that. But yeah.
Don, there's 100% someone in the audience right now who's saying, look at these two sanctimonious little bitches, you know, with their little partnership, and complaining that they could have made more money, and crying that people on Twitter are being mean to them and their friends are like affiliated with someone
fair
else.
enough.
There's like 100%. So shout out to the person or the people thinking that. Like, I totally get it.
Oh, 100%.
Yeah, completely understandable.
I'm on your team, dude.
Yeah, fuck us. But yeah, drama aside, and maybe we can do a more detailed, maybe little episode if we want to discuss like fee structure, Rollbit, etc. stuff. But again, it's like, if people want to trade there, they're going to trade there anyway. We're not going to change their mind. And also, our argument has an inherent conflict of interest because we have a different exchange partnership. So someone could quite simply say, you're only saying this because you want people to trade where you trade because you have a financial interest in them doing so. And it's like, well, that's not true, but it is true as far as the perception of the conflict of interest is there based on the facts alone, right? Even if there isn't one in reality.
It's hard to make that argument.
Yes, and that's why there's no call-out culture on crypto Twitter to a large extent, right? Because it's kind of stones from glass houses thing going on, where everyone's in similar pre-sale deals. Everyone's got some sort of ref link or did something at some point. So there's some fear of the blowback and all the Telegram chats and whatever else. So Cuban Missile Crisis 24/7, just nukes pointing at each other, you know? Should we talk about the market?
Sure, yeah.
We can try, at least. We can try. We're coming up to the monthly close. By next Casual Friday, it will have been finished. Looks like it's going to be red. And that's pretty much it. Every time we cover the monthly, it's like if it goes to 20k-ish, that's monthly support. If it goes to 30k-ish, that's monthly resistance. Everything else is significantly less exciting. I think if you wanted to start to reach for tentative arguments on the monthly, you could start looking at like previous month's low. And if we maybe spike that and close above it, that would be a decent signal. But even then, you'd be seeing that on the weekly and the daily as far as failed breakdowns go. So the monthly probably isn't the best time frame for that either.
Yeah.
I think if you can engage the monthly, you do it at 30 plus or close to 20, and everything else, unless it goes sideways here for ages and makes a new range, it's just not as interesting. What do you think?
Yeah, the one thing that I want to say about the monthly is that, I mean, I've been like bearish since like 30 point something K, right? And I expected a bigger red monthly candle, right? Like this is tiny. This is a tiny pullback, all things considered. Like that's the most bullish argument I can make. And it's not necessarily a bad one, really. Like we had a range at 20k that broke down. We went to 15k, but then we reclaimed that range and ran all the way up, right? Then we got like weekly resistance and in general, like just the market being weak. But that didn't really lead to a pullback that is of any significance on the monthly, right? So that's like one bullish argument. So far, yeah. That's one bullish argument that I can see, and I don't think it's a bad one. I could see us close this month. I mean, this month is almost certainly going to close red. But the fact of the matter is that we haven't reached resistance yet, right? 35k. So like I could see that happen next month or the one after. Like I'm not as bearish anymore as I was at 30 point something k. And it's just to do with that this thing is just taking ages to dump, which I think is very atypical for this kind of market. If this is like a bear market rally, you'd have expected it to dump faster, which I think is a pretty good argument, like I said, for the bulls. There's good bear arguments, but this is I just thought I'd mention like something that I haven't mentioned before.
Yeah, we wrote about it in Technical Roundup as well, right? That
Yeah.
time favors bulls because all
Yep.
the failed breakout, resistance, breakdown, reaction stuff has happened, and if it doesn't follow through, that sort of gives you a hint, at least. But it's always tricky, right? Is it lead, lag? Are you being impatient, or is it actually relative strength? It all gets a bit messy. But I think in general, the trend is, given how charts look, time favors the bullish side.
Yeah.
So bears want to see this thing speed up. They've probably been wanting to see it speed up for like weeks now. Like when we're going to talk about the ETH failed breakout, that seems like a relic at this point. As far as weekly BTC goes, it hasn't really like it's kind of been drifting lower, right? It had a lower low close and an inside week last week, and we've sort of spiked the bottom half of that and are trading pretty much at the weekly open. So not a whole lot going on there. Presumably your chart still looks the same with that single candle cluster at like 29.30, and then if it breaks above that, basically gap filled to monthly resistance at 35-ish.
Yep.
I'm not hugely fond of other weekly levels, to be honest with you. I talked about, the bottom of the last green candle before the last 2-3 weeks. I was like, well, that's like some sort of underside retest, and that happened last week. But again, hasn't really gone anywhere. And even if it does end up reclaiming like 27, on the daily you could start making good arguments, but higher time frame you're still below 30, so there's still a chance it's like a lower high or chop and nothing super compelling, right?
Yeah.
So the weekly inflection point seems to be 30 plus, and then you can make the argument that the monthly dump was fake, basically, and there's going to be one more push towards monthly resistance. So basically, monthly time frame redemption arc, and I love those. So that would be cool. And then as far as weekly support goes, it's basically either like here-ish, if you're clutching at straws, because it's just a bunch of wicks, right? If you take the first candle, the first weekly candle after the breakout and just draw that low, we've had no weekly close through it, right? Which is like interesting. So it's some sort of range low, and the market's been poking and prodding, but no follow through yet. But as far as chunky weekly support goes, as we've discussed, it's closer to 20. 22, 24 doesn't really matter. That's where the monthly levels overlap, and that's where the weekly breakout came from. But by definition, right now, 26-ish is sort of diddling in the middle on the weekly time frame, unless you want to go for the 27 is the range low argument. But then you make that argument, I think, on the daily, not on the weekly. What do you think?
I mean, I added a weekly line at 27.5, but I'm not the biggest fan. But I think if we reclaim that, we will have reclaimed the daily anyway. So I think that's like the new line in the sand as far
that's
as
the one I was
closes
talking
go.
about for sure. Yeah.
But there's really not that much. But like I said on the monthly, we've had a breakdown here, right? And so far nothing's happened, and I think that's a good thing for bulls. Every week that goes by, I will become more and more bullish. Even if price doesn't change. Obviously, if price goes up, I'm just going to flip back bullish entirely. Just based on the fact that, I mean, if you just look at previous tops and how they play out, it's very rare that they kind of like don't have big candles in general, and that they don't play out fast. And this one just looks like a consolidation more so than a breakdown now. As in, like, we've had a breakdown, but it didn't lead to anything. And that usually means in crypto, at least, means upside. So I'm kind of looking for the first sign of strength to jump back on board. I've actually like started playing on the bullish side again a little bit, but nothing major. But that's kind of where my head's at, just based on the fact that we should have moved, we didn't, and that, like, okay, is it lag argument only lasts for so long. I made the same argument if you remember at ETH, when ETH was chilling at like 1.2k, refusing to break down back then. I was like, I mean, the lag argument you can kind of make for a couple of days, maybe for a week or two, but if it persists, it's pretty hard to kind of argue that way. And I think it's the same here. Basically, the breakdown argument gets harder and harder to make the longer it takes.
Yeah, I think that's fair. I think that summarizes the weekly time frame as well, pretty much. So 20, if it does break down around 20-ish, 22, 24 are your supports. If you're a buy strength type of person, the earliest signal you're going to get on the weekly time frame is a close back above the breakdown point, basically, of 27.5, and that would be complemented by the fact they would also happen on the daily time frame. And as a general observation, time favors bulls because real breakdowns tend to be sharp, and the more time passes, the less sharp this one is, and therefore the lower probability that it's a real breakdown. Is that a fair summary?
Yep, exactly.
Excellent. Yeah, that's the weekly time frame. I don't disagree there. Now, as far as that's the weekly argument. Yeah. Now, the daily time frame. Is it still daily cluster season, or I'm tired of looking at this thing? It's every time I blink, I see it, and it's haunting my dreams. But it's been pretty good, and it's not the newsletter one we have, which is a bit more conservative because it's a boomer newsletter. That sounds like an insult, but it's actually the highest of compliments, given how it tends to trade. But I mean the initial cluster from like the 18th of March, at like 26.9 to 27.4, whatever. And the thing is, the daily closes around there have been pretty unambiguous, right? Like we haven't had a single daily close through it, like a proper one, and it's just been resistance so far. So if you get a daily close through there, then the weekly it becomes one of those classic Don timeframe cascades, right? It's like it's a 4-hour range reclaim, then that ends up as a daily range reclaim, then the weekly starts to look better, and the whole thing sort of changes quite quickly, right?
Yeah, one of my favorite things to see in the market.
Yeah, for sure, and I think you've tweeted about it, so people want to go back and check. There's a lot of content there, and also spoken about it on the channel, obviously. But yeah, I think that's pretty much the only thing worth focusing on the daily is 27.4 close, kind of like an early warning system for whether the weekly is going to come to play and be bullish. Otherwise, it's just kind of chopping at this cluster, and we had a breakdown candle of sorts a couple of days ago, but I think volatility has been so constricted, it seemed like a much bigger deal than it was in reality, because we're so starved for movements. Like from high to low, that's like a 4, it's like a 4% move, and the range itself was 2%, and we've sort of retraced half of it already, So it wasn't like it doesn't seem particularly definitive. This could just be like a bearish retest before it actually goes to zero. But it's been tricky to chase. Like if you've been chasing breakdowns, you've been having a rough time, I think.
Oh yeah.
In this market, and again with the passage of time, that argument becomes harder to make. But it seems like we're just cursed for a bit. The 4-hour range between like 26.3 and 27.3, it's like a 1K range in BTC. And that's a really rough spot to develop strong views, which is why I think waiting for those higher time frame ideas to at least start to come to fruition is worth it. Because if you've been waiting for at least the daily time frame to give you like a good signal, you haven't been chopped up at all, right? Because the cluster's been doing a really good job. So I think it's kind of proven its case. But for you degens out there, there's a nice 4-hour range here. Between, as I said, 27.3.4 and 26.3.4 that I think the market seems to be respecting for the time being. So do with that what you please. Any other daily time frame, either FUD or commentary, or is it pure kind of time frame cascade and send it? Otherwise, fuck it, see you elsewhere, I guess.
I mean, that's a good summary, but I'm looking at this and I actually really started like disliking 27.4, the high of the cluster. I was like, I wouldn't want to trust it for another test, right? Because it's been tested too much. It could go up, could go down. It will not give you a good signal in the sense that if we break through it, as into the upside, and close above it, I think there's a good chance it just keeps chopping. But the good thing is, and this might sound completely counterintuitive, but the good thing for bulls is that now the setup is much, much clearer again. Now that we've had this 4% massive giga new candle, because it kind of gives relevance to the level again. Before it was just kind of a level where we chopped at. Now it's a level where we chopped and then broke down from. So if you reclaim it, that's going to be a big, strong signal. And I think that could easily take us. I mean, if this shit is truly cursed, right? It could take us to 29.4K ish, and then go back down. Like that'd be horrendous. That's been kind of like the funny thing is, right? It feels like we've been moving like a lot, given prices up to X, but it's been a pretty flat range for the last 2 months now. Like we haven't really moved the last 2 months. And in general, the movements that we've had, even from the low, like as in from like 15K-ish, where it started going, that was like a month where it went up. And then we had sideways again. and then we had, after the pullback, we had another like 9-10 days of upside, and everything else has been sideways, right? So like the volatility has been dying down, volume's been dying down. But yeah, I do like 27.4 again. I think if we reclaim it, it's moon time, and like you said, time frames would start cascading into each other, which I love to see. Like when you have, like you said, the 4-hour rolling over into the daily, rolling over into the weekly, and if that goes into the monthly, which it can, right? Monthly resistance is at 35K.
There's a lot of space.
That's a pretty sweet deal, and that's a few good trades to have. So yeah, I like it. I'm, like I said at the beginning of the show, I'm turning more and more bullish with every day that goes by. Like I wouldn't put myself into the bear camp anymore, even though price is much lower than a while ago. Like I never understand the people that kind of get more bearish the further price goes down, and more bullish the further price goes up.
It's called momentum, kiddo. Go to university.
Yeah, but my mind kind of works the way. Like the higher prices go, I'm like, this is a fucking scam. Why would anyone pay 50,000 for one Bitcoin? And if it goes lower, I'm like, dude, this is the future of finance. Like, yeah, I can buy a piece of the future of finance for $15,000. I mean, count me in. So I don't know.
Some metaverse land to go with it, maybe. So you can be a metaverse feudal lord in Web3.
Yeah, I'm gonna buy a castle in the metaverse.
Oh, well, at least I'll be more affordable, yeah. Unless we're in the bull market. I do like the point you made about the count essentially being reset by the fact we've had a reaction at 27.4. Because the market technically, depending on how you measure whether you draw wicks or bodies, but on the daily, if you take like the most recent swing low, it did sort of poke or at least try to close below it. So you can make some argument that was an attempt at a lower low, and then if it closes above 27.4, you have the pattern of lower low into higher high. And that tends to be a pretty good type of market structure reversal setup, or I guess, quote unquote, confirmation of a failed breakdown, right? So I think there's something to be said for that.
It's the exact same setup that we have in the monthly, if you look at it, right? Sideways into nuke, into reclaim, into upwards momentum. So that'd be good news. And I think at the current time, that seems more likely than a breakdown to me. So yeah.
Sweet. So you will trade the cluster and you will enjoy it. That's the prevailing theme here. But yeah, that's BTC. I think it was fairly. I think we've covered that in sufficient detail. And next week we'll have all our usual content to keep you updated. So keep an eye on the daily cluster and see if the time frames start cascading. It's probably the best we can do. As far as ETH goes, this thing didn't even really break down.
Yep.
Even in market structure terms, on the daily, taking the most recent range at like 1.7, it didn't even make a lower low close on the daily time frame. It was just the most nothing burger move ever.
Which is quite bullish in my opinion.
Yeah, it is. I agree with that. I mean, it had a real chance, and it had a failed breakout on literally every single time frame, which is starting to become comical, right? Yep. Because the weekly, as we've discussed at length, and it's still the case, had a failed breakout at 2K. The price level is 1935, but given how long it's taking, that seems like the date for the failed breakout just as much. And then on the daily time frame, there was a failed break of that level and sort of that push higher into 2K that did the same thing. And then recently on the 4-hour, we had that BART price action through like 1830, 1840, where we just went sideways for a bit, tried to break out and broke down below it. So you've got like multi-time frame failed breakouts, and they're just not doing shit to this market. And if you look at how many weeks it's been since the weekly failed breakout, which is the main signal, ever since the close, it's been 1, 2, 3, 4, almost 5 full weeks of the same price after what should be like a super strong bearish signal. And the shit just isn't budging. So I think, again, that's if you wanted the sort of Steelman version of why time lag or the market basically not moving favors bulls, it's that basically, right? You've given them every single opportunity, every single setup on every single time frame to dump it, and it's kind of just not happening. Someone's willing to soak it, you know? And that's why I think the time argument is important. Obviously, you always have to sort of add the proviso that, well, it's still at resistance or below resistance, which is true. But I think time should kind of temper your expectations for that level, because if it's not doing its job for like 4 weeks, if it comes back to test it, I'm not going to be super trusting of that type of structure. Maybe we're just bull talking at resistance, Dom. What do you think the odds of that are?
I think I
We're
don't
just
know.
impatient, you know. It's like, what's 5 weeks between friends? You know, it's still a failed breakup.
No, I think I honestly like ETH looks really really good to me. I like ETH a lot. Uh, I don't think it's necessarily bull posting or bull talking at resistance. It's just kind of dissing the bears more so than because I right now I don't even have an ETH position, right? But I do want to have one, and I'm looking at this and I'm like I should be having one. I think the problem is that the TA is still pretty clear that you should be like on the bearish side of things, but everything in me when I look at this is like this is gonna go up. It had every chance to go down. If that doesn't happen, I mean, there's only one way. Like, there's two ways really: sideways and up, right? And sideways is okay if you pull, like if you're stuck in a position, as long as you're not paying funding for it. And up is pretty good if you're long. So I don't know. I like ETH. It's been stronger than I expected, and it's been kind of like while all the other altcoins again have been bleeding on the Bitcoin pair. If you look at ETH BTC on the daily, all it's done is slowly walk up, and it's going to like if you look at the weekly time frame on ETH BTC, and if you draw in the highs and the lows for the last like roughly year, that's been a downtrend, right? Like that's been lower highs and lower lows for the most part, and now this recent move, the last 4 weeks, they're starting to challenge that, right? Because we're almost back to the breakdown level where like we had this kind of like there was this bounce on the in March and April, and that broke back down, and that should have been trend continuation if it was truly bearish. So far, that hasn't really done shit. And I think if we go back above that high, which is very, very like we're very close, it's just a couple of percent now. You're breaking that structure, right? And then I think we're ready to go out of this cursed range, and that would actually be quite bullish. So I'm looking at ETH. I'm liking what I'm seeing. I just need a little bit more, but then I will aggressively position myself in this thing again. Just because one, it didn't dump when it should have, and two, it's actually doing the opposite, which is like slowly creeping up without drawing too much attention, and I kind of like that setup.
Yeah, I think that's right. Also, I think a reasonable question that people might ask is, look, you can't have it both ways. You're saying everything's at resistance, but then you're saying time favors bulls, but it's still at resistance. How do you solve for that dilemma? Do you do fuck all? And the answer is kind of, right? I think the solution there, at least the one that makes sense to me and sort of fits the parameters of my trading system, is basically unless you want to take like a really speculative position into resistance, which just doesn't pay me. I haven't done well doing that, and I quit doing it like 2 years ago. The whole buy it bullish resistance type of thing, I can't do it. It just cost me more than it made me. But I think the way you solve this is you sort of, as far as your aggressive positioning goes, you stay flat because it's still at resistance. And yes, while timing favors bulls if the market doesn't dump, that's not in itself a setup. But then you very aggressively chase that sort of time frame cascade. I really think that's sort of at least how I plan to go about it and what makes sense to me. That, if bears aren't doing their job, they haven't been invalidated yet, but it looks like they're sleeping on the job, right? And
Yeah.
so I just need my threshold for being bullish as a result is like lower. I just need like a shred of evidence as opposed to like multi time frame confirmation that they're on the wrong side of this. And so that usually can be found on lower time frames, like the daily or even the 4 hour, that those levels aren't going to do their job. The 2K ETH failed breakout and the whatever 27.4 cluster on BTC. And I think as soon as those start acting as more support than a resistance, or the market starts trading through them, even if it is on lower timeframes than I'd ordinarily be comfortable with expressing higher timeframe ideas, I think at that point the probability is such that it's worth taking a flyer that the thing is gonna unfold. But I think it's worth waiting for that sort of evidentiary threshold to be crossed. That you have something on some time frame that, hey, this is no longer resistance, and now you're just kind of waiting for the higher time frames to catch up and taking a lower time frame sort of flyer on the idea that the timeframes will sort of cascade into one another. Does that make any sense to you, or is that pure
Yes. No,
mumbling?
I do agree with you there.
Okay.
And like what I want to add with the E thing is like if you scroll through all the other altcoins that you could look at on the Bitcoin pairs, they all look hideous, or almost all of them look hideous. which makes this current ETH walk up quite impressive.
Even the USD pairs, if you want to cope using those up in USD, most of these are pretty bad, dude.
Yeah,
it's not looking great out
altcoins,
there.
Altcoins not that great. ETH looks very good, which is impressive. Like that's just something to note. And the fact that we are having very little altcoin action besides the stupid Pepe pump that we had is interesting as well, right? Like we haven't had like the crazy altcoin action that we usually get at the tail end of a rally. Besides, I mean, we kind of had it with Pepe, but it's not been all over the place like it usually is. So I'm wondering whether like the meme season was enough, or if maybe we're getting something later down the line. Curious about that one.
Yeah, I've seen some lower cap stuff. Not like Memecoin stuff, but like sort of mid cap Binance trendy stuff. Traders get active there. Not massively my cup of tea. But yeah, as far as widespread stuff goes, there really hasn't been all too much. And most of these, like altcoins, are still very jittery. Even if BTC is down 2-4%, we saw alts down more than you'd expect, even with that beta effect. That's really all I've got for the majors, unless you want to add anything on BTC and ETH. The summary version is that the technicals haven't changed. The technicals not changing favors bulls. They're still bearish until proven otherwise, but because of the time component, if you start getting lower time frame evidence of bullishness, it's worth taking that punt, because if the time frames cascade into one another and the bears have fumbled like a great setup, then that thing is going to move quickly and is likely to move towards monthly resistance, and that's a trade worth giving yourself a chance to be positioned for, even if it will require a bit of lower time frame cajoling. Is that fair?
Yep.
Okay. It's like, don't get bullish at resistance, but like a bit above resistance, you can be significantly more bullish than you would be ordinarily, I think. You can tell how my trading brain works, not very well. I don't have anything particularly incisive to add as far as other altcoins go. I did an Altcoin Thursday episode and shilled and fudded them at resistance, and they dumped, and felt good about that. Fumbled a couple of my own setups. One was okay, one was shit. Nothing too special. But I just feel like at this point, I don't find them terribly interesting, and it feels like a lot of the easy legs have played out. And then similar to how we'd expect BTC and ETH momentum to really pick up as soon as there's like some rather than no evidence of strength, I think alts will likely follow, or at least the environment for them will be better than whatever this is. So I haven't been paying a ton of attention to these, and most of the stuff I was paying attention to kind of hit short to intermediate term targets and kind of lost my interest from that point onwards. There are a few outliers, obviously. Litecoin halving keeps coming up every week and then gets dumped and people forget, and then it comes up again. It's a bit of an odd one.
That's very funny.
Yeah, and then there are a few, as always, kind of Hasaka tweet narrative plays like Render and a couple of others, but it's a relatively minor part of the market. What's your view on alts beyond likely to underperform from what you said in your ETH BTC analysis?
Yeah, I mean, I've been trading Litecoin a little bit. No big surprise there. Like I took a position at 80, sold it at 92, bought back at 85, and that's the current kind of state of it on my Litecoin trading anyway. I think that one is interesting because it has a narrative, but that narrative has to play out pretty soon too, right? Like that's the problem with that one, given Litecoin halving is in 70 days, and that's pretty soon, which means that if you want to get like a pump into the event, or like at least a little bit before it, that would have to happen pretty soon. And the altcoin market isn't really doing too well. Like you just need to scroll through the list to kind of see how shit everything's been. And that makes the battle, like that makes it an uphill battle for something like this to actually play out, because if altcoins are pumping left, right, and center, people are very willing to jump onto like, okay, there's a halving coming, or there's this narrative or that narrative. But as long as the altcoins aren't really warmed up yet, it's pretty tough. So I'm not expecting too much on that front. It's not like I'm going all in on any altcoins, because I'm just scrolling through them and I just find them all kind of shitty looking. But yeah, I have like a little bit of a Litecoin position. just to not FOMO in if it does go up towards the halving. But other than that, I'm pretty bearish, like most of them. I think in general, like if Bitcoin surprises us and actually goes to 35K, I could see the altcoin Bitcoin pairs, if they don't have any narrative, right, which most of them just don't have right now, right, I could see the altcoin Bitcoin pairs go down, which just means that Bitcoin would be the better play in any case. Because if we dump here, I'm pretty sure altcoin Bitcoin pairs are gonna go down as well, right? So you have to pick very wisely, and you have to concentrate on the ones that actually have a narrative or like a liquidity event where you can sell into, rather than just, oh, I like this coin, I'm gonna buy it. That's kind of my view on the altcoins anyway.
Yeah, I think that's fair. And not too long ago, we did a review on the recent shiny stuff, and it's far less recent and even less shiny. And so that portion of the market has kind of dissipated. We also offered in Technical Roundup, our free newsletter, trletter.com, a refutation of the sort of common wisdom that's been paraded around that, oh, well, BTC and ETH have been going sideways. It's been amazing for altcoins. It's like, has it? Like, has it really? Like, on what time frame? Like, yeah, a few Binance mid caps have been trending, and like maybe that's enough. But looking at the big caps and even like the combination of big caps and shiny stuff, which I think are decent sort of proxy measures for the altcoin market, they've been shit. You know, and so I'm not entirely sure what that argument is based on. Like maybe people are trading well because they don't feel like they need to focus as much on BTC and ETH and can just trade alt USD pairs on low time frames without caring too much about other stuff. Maybe it's that. But to jump from that to suggest that like altcoins as a whole have been doing well, I don't think that's supported by prices, by performance relative to BTC, performance relative to ETH. It's been a bit shit, at least on the stuff I look at as far as big caps and shiny things. But you know, there are plenty of coins to go around, Don. So I'm sure we're missing some context. You certainly with your 2017 watch list of ICX, Neo, Qtum, fucking.
I actually don't have any of those in my watch list, but I do have Litecoin. I do have my other boomer coins. So
yeah,
fair enough. The thing is, and this is something that I say every cycle, and every cycle the new people come at me, and the people that have been around for a while just stay silent, right? But like coins will come and go, and whatever shiny new stuff that you have now, it's gonna be something that no one cares about next cycle. And the interesting part right now is that ETH's kind of been killing that narrative. It's the first one to do so. Like everything else just kind of disappears cycle over cycle. You can very easily check that. Like there's on CoinMarketCap, for example, there's like a way to look at historical data if you want to kind of see how, like, what was around before and what isn't around anymore. All the coins disappear, and ETH so far hasn't, which makes it an interesting kind of outlier in that regard. But yeah, I've seen it too many times where people just kind of focus on, like, get hung up on coins where they think it's nice because whoever, like someone on Twitter shielded to them. But that's not the case, right? Everyone's just playing narratives. And the more altcoins there are out there, and this is the reason why the altcoin market has been so shit, because back in the day, there was like 100 altcoins that you could properly trade, and then there's liquidity there, right? There's a bunch of people trading it. Nowadays, you have 1,000 plus altcoins, and you have Uniswap kind of draining everyone, like people just making garbage coins and other people buying it. So the liquidity isn't really as concentrated, and that just kind of makes it less of an attractive bet. So the more altcoins there are, the less attractive they become. ETH's been a really good example for that, because ETH's an altcoin, and ETH's been kind of like doing pretty well. And it's it's not been a good example, but it's actually been the opposite. But everything else been a good example of it. Like cycle over cycle, stuff just disappears. So
I just feel like you can't learn that lesson, Don, without going through it. You know, we can talk about it every week if we wanted to, but until you bag hold something that you thought was the future to like minus 90% and a roll in the Telegram, I feel like you can't learn that lesson without going through it. as painful as that experience is.
It's kind of sad because no matter like how often I say it, I still like people still do it. And then the funniest thing is when people make fun of the coins that I trade, and then they're actually trading like just the shiny stuff, but on the tail end of the market cycle. Like people made fun of my coins that I was trading when Pippe was going crazy. Now Pippe is going like it's down like 60-70%, while like these old coins are not. But then again, like I think there's like if you jump from shiny to shiny stuff quick enough, like that's the best way to trade altcoins in general. You just have to be very quick, and you cannot keep it. Basically, you have to always get in, get out, get in, get out, and then there's money to be made. But
but also like the odds of someone being able to do that well and still outperform ETH, I think for the average person, I don't like those odds, Don, you know? Like the amount of rotation it requires and the amount of like active trading and management to maybe outperform ETH if you do it really well, versus like a tenth of the effort and just have ETH. Obviously, assuming cyclically it makes sense, etc., etc. That should always be in the back of your mind, right? Like how much risk am I taking on, and how much more effort is this going to take relative to beating what's a very generous benchmark for alts as far as ETH goes? And I think people tend to forget that. And also, if you just look at these alt ETH charts, so like we know the way they work, right? Like for some portion of a cycle, like 3 to 9 months, they'll completely wreck ETH because it's the shiny new thing, and then it bleeds out for like 2-3 years straight and never comes close to beating it again, you know? So that should always be in the back of your mind when you're trading alts. Like, obviously short-term USD, scalping, liquidations, whatever, all of that stuff aside, the classic perp punting, if you're allocating to alts, you should have in the back of your mind whether you really believe, and there's good evidence to suggest that you're going to be able to beat the returns of doing the same with Ethereum. And for most people, I think an honest assessment of that will land at no or probably not, you know? Certainly from a holding point of view.
Yep, I agree.
But that's the altcoin landscape. I've obviously been manipulating Litecoin behind the scenes, Don, because I had on Monday, on Altcoin Thursdays, resistance at 94 and support at 85.5. So I guess you're welcome. That's sort of my daily range for LTC. I'll make sure to send you WhatsApp voice notes at 4 a.m. when we hit the range midpoint, telling you to sell before it goes to 300.
I'm not going to sell if it goes up. I'm only going to sell if it goes down. Like a good community member. Like a good community member.
Momentum trader Don is back when he's trade managing. It's like when you're entering trades, you're like the opposite. You'll sell on moves up and buy on moves down. When you're trade managing, it's the other way around, which is quite funny. But yeah, that's as far as I think that's what makes sense for altcoins without having to go over the same boomer talking points of outperforming ETH and altcoins, shiny coins, whatever. Last bit I want to talk about as far as charts go. Legacy tried to break out, kind of got stuffed and then got unstuffed. It's a bit of a clusterfuck right now, and being hard carried by a few names, and Nvidia went up 10 trillion%. It's still pretty volatile there. So on the S&P monthly, it's looking increasingly likely that your Echo Bubble Wall Street cheat sheet target of 4,300-ish is going to hit. The last monthly close which I think we might have talked about somewhere, was actually quite good. It was a breakout, and then this month at the moment just looks like a retest month of the 4130 level, right? Sort of the highest close in the consolidation. And then the next, the sort of right shoulder resistance, or the reasonable lower high level, is 4,300 to what, like 4,400-ish, but in any case, monthly 4,300 area, right? And I think on the weekly, that's also supported. It's basically some version of support before the big nuke that happened in 22 and last year. So yeah, so two questions. What's your conviction in 4,300 and that area holding as a lower high? Do you think we could enter some schizo scenario where the market just keeps pushing? And then the second question is, do you think at the moment, just looking at the chart on the weekly and the daily, whatever, this just looks like a breakout and retest? So I guess that's sort of, related to the first question of what's your view on 4,300 generally?
It's a pretty tough question because I don't want to be bearish the S&P.
I mean,
Like
fuck it.
that's
Do you even care? I mean, if we're talking colloquially, like, S&P broke out, kind of spiked, whatever. Like, do you care at the moment, or do you think the correlation is at a point where it's like,
no, there's still correlation there, and if there's like what we get is basically just pockets of strength in either the S&P or Bitcoin, and then like sometimes one or the other doesn't really do what it's supposed to. Mainly, the S&P goes up, Bitcoin just doesn't go up. But by having the tailwind of the S&P, you can like the one thing is like Bitcoin breaks out like with a 2 or 3K candle, and the S&P doesn't. You're going to have a bunch of people kind of looking for sells to bring it back to fair value or whatever they deem that to be, where it's basically in line with the S&P. And I think there's not enough people doing that you could hurt them for doing it, right? So basically, I think the moment Bitcoin actually outperforms the S&P by a significant margin, a bunch of people will just sell until either the S&P goes up or until Bitcoin goes back down, so they can rebuy whenever the S&P level is reached again, which is a little bit of a stupid situation.
yeah.
But so like we do want the S&P kind of backdrop, as in like the S&P being a little bit stronger, makes it easier to be bullish. But so I do care. But the thing is, like, I don't really want to be bearish the S&P, like if you look through the like through Europe, for example, I mean the DAX, the DAX, the German X, like the German version of the S&P, basically, not really, but close enough. That's back at all-time highs. That's
SFP,
pushing.
bro.
Yeah,
Failed
but
breakout, Pico top, BTC 69K. It's over.
possibly,
It could be. It actually
honestly,
could be. Yeah.
yeah, but
That'd be so funny, wouldn't it?
yeah, that'd be fucking hilarious. But the thing is, like I don't want to be bearish these things because generally long term they trend up, right? So I will look for weakness at 4.3, 4.4K in the S&P, and I could see myself, if I'm bullish on crypto, going into that level, de-risking, because I think that could lead to some volatility to the downside. Even if this is bullish, I could see a wick down of like a couple percent that's gonna spook the fuck out of people before it goes up. So I do care, and I would like it to be strong. But yeah, we are getting close to resistance.
Bro,
So
imagine the Wall Street cheat sheet charts. If it hits like 43, 44 and starts to turn, that sort of complacency bounce fractal, it's going to be
oh
everywhere.
yeah.
That's
Yeah,
gonna
but
be.
I think you would want to be buying like 3.5, 3.6, even like if everything turns super bearish all of a sudden, like expecting to go back to like 2018, 19, 20 levels, and especially the lows. I think that's completely crazy. Like that's not going to happen. Like the people that kind of think that there's going to be a Wall Street cheat sheet for real, right? They're on crack. Like that's just not going to happen. Like I think you could see the cheat sheet look very pretty, and then I think it's going to completely fail, and we're going to keep going up again.
It's
So
quite good on like lower time frame, newer speculative stuff. That type of blow off top into weak bounce model.
yes, I mean
But
it's generally very good.
yeah,
Yeah,
yeah. The thing is, it's just a feature of market structure that you see in sort of speculative assets or assets that are traded. But you don't just take it and look where you can superimpose it and then trade that. It's sort of completely backwards, right?
yes,
It's an odd way to go about it. But yeah,
especially in markets that are literally meant to only go up, right? Like you can use this in with Bitcoin, because at the end of the day, what's backing Bitcoin? What's like like I mean, you can get into the whole conversation, blah blah blah. But at the end of the day, right? Like um, it trades like a very speculative asset. Trades pretty much like any meme stock would, and so you have this kind of like thing where the cheat sheet would work quite well, but then if you put it on the S&P on the fucking weekly or monthly time frame, especially on the monthly time frame, your target would basically be like going back to like prices from 2000, 2005, 2010, and that's ridiculous, right? The thing would have to go down so far that the entire world like economy would collapse and everyone would be sitting on the streets begging for food. And if you're expecting that, I don't think like necessarily shorting the S&P would be the best way of kind of ensuring that you're good or that you're making money out of the situation.
Just buy ammo instead.
Yeah, like literally, like this kind of doomer talk where people are just completely losing sight of what this actually would mean is always quite funny to me. So like if that played out, if we went to 4.3, 4.4, and then kind of like had a massive crash afterwards, I wouldn't expect it to go below 3K. And that's already quite the deep nuke. And I think anywhere in that area, you get a low that you will never go again.
Yeah. Also, just to be clear, like the argument Don's making, if you look at what the Wall Street cheat sheet ordinarily looks like, after that sort of complacency lower high bounce, the thing basically goes to zero, right?
Yep.
So it's not like, oh, if you impose the cheat sheet on this, it goes towards like the lows or towards support. It's like, no, it's like a 60, 70, 80, 90% decline. Is if taken at face value what the Wall Street cheat sheet type of thing says. And if that's your view on risk markets more broadly, that's pretty extreme, pretty unlikely, and sort of trading it is going to be the least of your concerns if that's what the world economy looks like, I think.
Yes,
so
exactly.
I don't think it's a particularly useful mental model to have. But hey, you never know. just got to end it with that, right? Just in case, so we can look smart. That's really all I've got to say chart-wise. I think that's a decent summary overall. I'm not going to go through the whole thing again. People can jump back and listen. Time favors bulls. The daily, if you start getting signs of strength, those are signals worth taking seriously because of the time-based component. Otherwise, let it chop, chill, whatever at resistance. If it gets above it, worth being a tad aggressive because there's a chance of the time frames cascading. And I just said what I said I wouldn't do, but hey-ho, here we go. Cool. Yep. Should we do some news? Because I haven't got any other market-related stuff. Even the S&P stuff was a bit of a reach because it was, it's breaking out or trying to. Okay. And also, Don, if anyone listened to us about Meta, they're up so much, they're never listening to Technical Roundup again. Because what was the price on? I don't even remember. I think it was like at the peak of bottom.
I remember it exactly because I was trying to buy it.
What was it?
Oh, it was 96.
Oh god, no.
Oh yes.
Wow.
I even at the peak of bottom, I had a stream like at 90, I think.
Yeah.
Like at the peak of bottom, and I was like, I'm actually just gonna see how I can lever up on this. And the problem was that I just couldn't find a good way for me to lever up. And I was like, well, I mean, fuck it. I'll just leave it. I'll trade crypto instead.
You wouldn't have needed to lever up. It went 3x.
I'm such
man,
an idiot.
It's fine. I'm gonna cope and draw like a big monthly resistance box right now. Fuck you. That's it. It's over. This is the
actually
last rally ever.
It's actually a
now the Wall Street cheat sheet is gonna work. But yeah, that was fun. Thing is, our thesis was so shitty as well. We were like, hey, metaverse, not a bad way to get it. Like complete nonsense. I haven't looked at a financial statement in our lives, but markets are a meme. And it's all about liquidity, bro. That's what all the smart kids say nowadays.
Yeah.
Have you noticed how cringe price action trading on Twitter? It goes through sorts of trends where from time to time it becomes like pretty reasonable and everyone generally agrees like, hey, this is pretty pedestrian. It works if done properly and if you've got a good system around it, but it's mostly just like, as Robot James likes to say, it's just, the market isn't a science, it's just cunts buying and selling, right? And so when you're drawing technical levels, that's roughly what you're doing. You don't have any strong like epistemological views on the market. It's just like, hey, well, this is a thing, people buy and sell, they bought and sold around these levels. I think something might happen here and I've got 10,000 hours of screen time and I'm just going to wait to see if there's something I like at this level, right? And I think but when price action traders look at the market in that way, it just makes a lot of sense. And it's a good sort of grounded way to look at it. But then cringe permeates through the price action trading ecosystem. And suddenly you look at Twitter and it's like a 5-minute chart being like equal high rate, equal low rate. Chotch is one I've seen recently. Change of character, which is just like the market making a lower low or like going sideways after trending up or sideways after trending down. And it's like Chotch, MSB, SFP, FVG fill into minus OB. It's like GFY ASAP is my response to that because the whole thing has just become so ludicrous. It's like essentially gambling on micro time frames and trying to explain every every single move and make it seem such that the whole thing is like engineered from the get-go, and the price action is this like objective thing that's out there, like the laws of physics and nature, if you will, that's to be discovered. And if you've discovered it and you know all the acronyms, and that's it. You've sort of left Plato's cave, and you can see markets for what they truly are, which is like an algorithmic, path-dependent, non-Brownian, deterministic, whatever piece of shit. And it's just so far from reality that those people are really good for getting Twitter followers and also like monetizing content. But as far as actually executing and trading, or even just having a basic understanding of market microstructure, those wouldn't necessarily be the types of people that I would listen to. But it's getting very popular again to sort of have a 5-minute chart with 50 annotations talking about why every wick was important. And I've been down that rabbit hole. Like, trust me, we both have, and it's not a productive or good place to be. So there's some meta commentary for you, pun intended, because there's also a meta chart on the screen.
I mean, you really like, and this is an advice that I've given like quite a few times over the years. Like, everyone should really get into like there's a bunch of really small markets in crypto, right? Where you can put $100. They're so illiquid that your $100 are gonna feel like you're trading with like 100 Bitcoin instead, right? And once you trade a market that is so tiny and so illiquid yourself for a while, and you try to make some money with it or whatever, you learn so much, right? Because, for example, like you see an up move happening on your shitty shitcoin that you bought with 100 euros, and you just want to get like some of that out, and you see an up move and you sell some, right? And the entire thing just nukes just because of your sell. Like, when you know like how this trades, like then you can kind of extrapolate that to like Bitcoin and ETH, right? And other bigger coins, where it's like if someone's trying to sell you that there's a 5-minute SFP, you know that like there was some random dude sitting there just selling a bunch, right? At the end of the day. And I mean, there's like you can make money with like trading that way if you want to, but at the end of the day, like most of it is very random. So yeah, I think that's just like an advice. That's what I did back in the day. I was just like basically market making a tiny coin over like a couple of months. A cool thing was like I was basically like just looking to see how much I could make off the coin while trading it. As in like I was increasing the position that I had in the coin. And once I had enough, I just set sells at like 10x the price and walked away. And it was right before the altcoin season of like 17, 18. And when I actually completely forgot about it and was on an obscure exchange. When I checked back, I was like, what the fuck, where's this money from? But like, this is like something where you will learn like that a lot of this garbage that people try to show you is just garbage, because you will see how much of an impact just you yourself can have. And there's enough people that have a bunch of Bitcoin or ETH sitting there that will just wick you out of positions. And it's not because someone is engineering something, it's because someone with a big stack just sold a bunch. And when people try to overcomplicate it, especially when they do it on the low time frames, right? Like if someone's selling you something super fucking complicated on the high time frames, I'd go with the benefit of the doubt and actually like consider that might be something there. But if someone's trying to sell you something overcomplicated on the low time frames, they're probably trying to sell you a paid course at the end of the day.
Thing is, like, you perhaps are even being too charitable, because in many cases it crosses from complexity straight up to conspiracy, right? These aren't just like market participants buying and selling, and some buy and sell with different sizes and different urgencies at different prices. It's more like there's someone there whose job it is to take you with your 0.04 BTC out of your position. That's their mandate, and the sort of markets are algorithmically determined and part dependent. Like the amount of stuff that you need to believe in order for the explanations of those systems to be true, like literally turns you straight conspiracy tier. And the thing is, like many things in the world, the truth is actually often very boring as far as market microstructure goes. Like it's just cunts buying and selling, and sometimes the market's less liquid and size has in like big trades and market orders and demands for liquidity, be it deliberate or indiscriminate, have a larger market impact because of the depth or whatever, microstructure nuances related to the pair you're trading, and that's really it. Maybe someone just buys it a bad, like, people are bad at trading, right? And so you've got people buying and selling at bad prices, and there's someone on the other side of that. Like, often the simplest explanations aren't necessarily the best ones, but at least will land you in the right neighborhood, versus starting from an absurd premise of the whole thing is engineered and then sort of trying to reason backwards and make sense of everything after the fact. It's completely the wrong way to go around it. I've got a video on my channel about market microstructure. Adam from Trading Riot has a good one as well. If you want to figure out like why markets move and the impact of market orders versus limit orders, all that type of stuff, I just start with something that's real and something you can see, versus having to buy in to an explanation with very thin evidence, and then you look at the market through that lens, and all it's going to be is pure confirmation bias. Like, every week I can be like, aha, look, it is like a liquidity grab type of thing that's been engineered to take out stops. Like, is it, or is it just someone trading at bad prices? Anyway, with that done, should we cover some news?
Yes, let's do it.
Excellent. Okay, here comes my agonizing Casual Friday tab opening.
Oh, I love it.
I know. I love it too, man. I love it too. On light mode of all things. So,
yeah.
This one is a bit funny, I think. There was a tweet. There's this new brand of crypto account, the DeFi Threadooors.
Yeah,
you know where I'm going with this, right? And a lot of the time, like, some of them are very decent and provide educational content and whatever else. Some of them are just not so decent and make quite pedestrian mistakes. And I'm still not fully sold on the value proposition. Like, people who explain protocols and trades and wallet movements, that's cool. I think the jury's out on the whole practice of, oh, well, if you know how to use on-chain tools well enough, you can just like copy trade big wallets and become rich. I just don't think there's sufficient evidence to back up that claim, especially given you don't know what the full extent of someone's on-chain activity, how that reflects on their trading. Like, are they staking? Are they hedging? Are they market making? Are they delta neutral? What does their centralized exchange activity look like? If you try to tail, are you going to get adversely selected? Are you going to get MEV'd? Are you too late? Do you have the full context of the trade? There's so many variables that I don't think it's as simple as, well, this wallet has a lot of money, I'm going to copy trade them and make a lot of money, right? So I think that's the first thing I want to say. So this is a peculiar example, and again, no hate against the gentleman Cyril XBT. I'm sure it's a mistake made in good faith. At least I fucking hope so. Although I do think it is quite disqualifying. Because what happened here is, you can see here, the thread says, final update, this crypto whale went from 20 million to 390 million all in 1 year. So what coins did they buy, and how did they do almost 20,000+% in just a year? His wallet, plus I'll teach the easiest ways to find wallets like this, all in this thread. 4,000 likes. And then Arkham Intel, which is like on-chain tooling platform, they replied saying, hey Cyril, this is actually a wallet from the exchange BTC Turk. The assets here would be customer funds and don't necessarily indicate a directional bias of the exchange itself. You can check our Intel team's tags for this wallet on Arkham. So, I mean, this is hilarious, right? Like, I can try to be sort of gentlemanly and polite about it, but if you're like a DeFi Threadooor on-chain guy and you can't distinguish an exchange from like a speculator, you suck. It's either you suck, or you've committed some catastrophic oversight, or you're acting in bad faith and you know that it's not true, but it would get more engagement that way. Ironically, the last one is the most charitable one, even though it still makes you look very, very dumb, right?
Yeah, I mean, he's been sacked XPT before, so...
Oh, is that true?
Yes.
Yikes. So yeah, I just found this really funny. Like, how bad do you have to be at whatever it is you do if your whole thing is like on-chain DeFi and you can't distinguish like an exchange wallet from like just a normal dude casually making 20,000% from 20 mil to 390 million. Comical. And as always, as per the laws of social media, the correction post gets a tiny fraction, like 10% of the engagement of the nonsense itself. 440 likes versus 4K, which is quite sad.
Yes.
What do you think of the whole like on-chain wallet copy trading? Oh, here's my thread, all this alpha, here's what all the funds are holding. That type of content, essentially.
I mean, it's quite funny to me. Like, if you're trying to copy trade someone, you better know what the fuck they're doing, because there's like some exchanges, for example, that you would most definitely would not want to copy trade me on, right? Because I split up my trading, and I'm like, sometimes like I'm trading on an exchange just to have some fun, right? And that's probably not the exchange or like the wallet that you would want to copy trade. And then there's some where I'm like, and this is what I used to do anyway. I don't do it as much anymore, but I used to have like a specific exchange where I would hedge, and then like oftentimes that would result in a loss, right? And well, there you go. Then you copy trade like someone where you think like, oh, I'm a genius, and he's just losing money left, right, and center. But at the end of the day, like there's much more behind what you're trying to like, or what you're seeing in general. So I don't know about that one.
We saw that
But
with
then,
leaderboards too, right? Like on
yes.
FTX and Bitfinex, etc. People trying to read into it, and you just can't. You don't have the full information.
Yes. I think in general, like it's a little bit of a fool's game, but if you find something cool there, I mean, be my guest, right? Maybe there is alpha there. I'm just too stupid to see it. In general, like the whole on-chain stuff, I've honestly just never felt the need to like go too deep into it, because everyone that's been trying to push it has been an idiot so far. So it's kind of like, I don't know. It's the same with everything in life, right? When I only hear idiots talking about a particular topic, like I have like 10 dumb friends, and all 10 dumb friends come to me to talk about one topic with me, I'm gonna assume that their opinion is gonna be dumb, right?
I'm four
Even
of
if
them,
it's
to be clear.
even if it's not, right? This kind of like, I mean, it's a bias, and it's not necessarily the best one to have, especially in trading. But that's kind of how it's been for me. So I've just been staying clear. So I don't want to make too grand a statement that it's all bullshit or all dumb, because at the end of the day, I just haven't put the time in, because everyone that I've seen do it has kind of been stupid.
Yeah. Although the same argument would apply to, if you want to play devil's advocate or whatever, the same argument applies to TA, right? The average person doing TA and how they view markets and how they trade is pretty disqualifying in itself.
Yes.
But then you sort of land at the other issue, which is you can't, like, if you're trying to honestly and rigorously assess whether something makes sense, whether it's a good thing to do, you can't pick the dumbest people doing that thing and use that as a benchmark, right?
Yes.
But yeah, with on-chain, ever since like 2021, with the Bitcoin people first, then the DeFi Threadooors, they're not sending their best on. Like you, I haven't exactly been impressed. But hey ho, I draw lines on charts, so what can I say? Bitcoin price could reach 45,000 due to rising gold price, says JP Morgan.
God.
The strategists expect Ether to somewhat underperform Bitcoin over the near term. So if you ever feel dumb, like your systems for analyzing and valuing crypto don't make sense, this kind of stuff should generally make you feel better, because even like top banks, sell side analysts, whatever, they're all just making it up, right? Stock to flow, complete fiction. Short-term correlations and like extrapolating prices from that, basically fiction. The whole miners, like the sort of cost of producing BTC and their break-even price, etc. It's like a labor theory of value knockoff. Also complete fiction. Most of it is just like speculation, liquidity, momentum, I feel. And then sort of some quote-unquote liquidity dynamics of people getting aggressive on futures and getting liquidated and that causing a liquidation cascade. I think all of those things have way more explanatory power than latching onto any of the other things that I mentioned. And they work because it's a speculative asset, so if you want to get some sense of where it's going, you look at what the speculators are doing. That seems fairly self-evident to me, as opposed to like trying to latch on to some sort of model from TradFi and hoping it sticks. And also, you and I have spoken about this at length. Some of the worst fund managers in crypto are suits from TradFi who found it a bit tricky there, presumably, or thought that crypto would be like a cakewalk and come in with their DCF, cash flow, equity, valuation, whatever models, and just completely shit because they just don't get it, for lack of a better term. So I found this quite funny. And then on ETH, they said sell pressure beyond the Shanghai upgrade. And then... yeah, cautious, classic stuff, right? Cautious stance on digital assets as headwinds from the US regulatory crackdown, yada, yada, yada. So yeah, if you're ever feeling like your analytical and valuation framework for crypto isn't great, no one has a good one. The smart people tend to fall for the dumb stuff. And if you look at the tools that speculators are using to speculate, you'll be in a pretty good spot, I feel like. What do you think, Don? 45K gold correlation? Are you buying into that idea?
No, man, it's just fucking dumb. But at the end of the day, like, I think they're just basically like saying whatever at this point. Like, they kind of sometimes have 2 or 3 predictions going that conflict each other. So I think they're just basically trying to be in the headlines, or whatever.
Yeah,
It
if
seems
we
a little
get to
bit of
dump on their
another one.
clients, Don, that's a good thing.
Oh
I'll
yeah,
take that. And also, look, while I was scrambling for the wording, I didn't even see in this article they did that thing as well. They talk about the halving, and they also mention Bitcoin's production cost. So even the sort of made up shit that I couldn't put a word on, of course they bring that up as well. I'm surprised Stock to Flow didn't make it. So yeah, I'm just, the whole thing is nonsensical. At least tends to be. None of these models work. Like, you can't have these types of path-dependent predictive models for stuff that'll go up like 100% with no catalyst and nothing to do with it, and then every 4 years go down like 80%. What kind of model accounts for that, apart from a model which makes directly those claims that, hey, this is a very volatile thing, it's probably going to go up a shit ton and then it'll go down a shit ton, and the rest will just have to basically be there, versus looking for external factors to tether it to.
I mean, the cool part about crypto, right, and this has been true since its inception, is that this thing, like you said, is going to go up a lot and it's going to go down a lot. And if you buy when it goes down a lot, and if you sell when it goes up a lot, you generally make money. Like, it's like one of the coolest markets ever, because you either have markets, at least in the TradFi world, that just go sideways forever, or go up forever, or go down forever, right? There's very rarely a market that goes up and then completely collapses, and then goes up again and then completely collapses. Like, that's the best market to trade, just full stop, right? Like, that's what you need to make a shitload of money, because if a market just keeps going up, you basically have to lever to the tits to take advantage of it. And then if it has one black swan or one like bad event, you're out. Whereas in crypto, like, this thing nukes 80%, you buy, it goes back to where it was, and you're up 5x, right?
Yeah.
And then it goes up another 5x from that point, you sell, and then it goes down 80% again, or 90% even. And like, you can compound so easily in crypto, whereas in other markets you cannot. So like, all of this kind of like predicting where it's gonna go, whatever, I think is a little bit unnecessary. Like, this thing will go up, thing will go down. Generally speaking, and I mean, there will be an end to this at some point, right? Like, if it goes down anywhere close to 80%, you want to be buying, and then once it's at a new all-time high at some point, like a couple months after it's made a new all-time high, you probably want to be selling, and that's all there is to it on the high time frames. Like you said, I don't really buy into the mining costs, whatever, like production cost of one Bitcoin being like anything really. It's all speculation, and it has been, and I'll treat it as such until that kind of fails, which basically just means, like, at some point this thing either goes to zero, which is possible, I think, or it goes to high prices and then just starts behaving normally, which, fair enough, also okay. But for now, we are still in that cycle of up, down, up, down, up, down, up, down, which is great.
Yep, agreed. Well said. Nothing to add there. Don, some of my AI shit-talking FUD pivot stuff is coming to fruition. Paradigm broadening crypto-only focus to areas including AI. And the firm appears to have removed crypto/Web3 mentions from the front page of its website earlier this month, suggesting a rebrand in the wake of high-profile collapses in the sector and rising regulatory uncertainty in the US. Now, the interesting thing about this is it's fucking Paradigm. You know, they're like pretty much the best of the best, sort of some of the best technical guys, reputationally some of the best, and this is sort of S tier type of VC, if it exists in crypto, I guess in relative terms. And for them to, like, this is a pretty hard pivot. Now, obviously, one of the founders then tweeted earlier today, I'm so excited about crypto, etc., etc. But it's one of those actions speak louder than words type of things. It's not like some shitty fund that chases every bubble, like, oh, crypto, real estate, metaverse, Web3, AI, and just pivot after pivot. This is like a very long-term incumbent crypto native fund, and even they have seen, that's pretty insulting. They have seen I guess, the incoming bubble in AI, and it's been sufficient enough, and crypto, I guess, has been shit enough for them to, pivot quite substantially, or at least seemingly allocate a lot of resources and posturing to, away from crypto and towards AI. So this would be a non-story if it were, like I said, one of those sort of very grifty funds, but this is very much a household name. And I still hold my view that most of the AI crypto type of resonance or synergy is fucking horseshit cope, and there's very little there, and it's just crypto people getting worried that they're on the wrong bubble and trying to find some connection to make sure people buy their bags instead of speculating on AI and Nvidia and other stuff. What do you think about all of this?
Yeah, 100% agree. Like any crypto AI just has been complete and utter garbage. I don't really see it. It's just basically people trying to hop on a trend. But I mean, I cannot really fault them. I think it's a pretty smart move.
Yes.
It's a little bit late, but if they can, I think it's early in the bubble. But it feels late given like we've just had like basically up only for quite a while already. But I think that's probably going to continue. So it's not like, doesn't seem like a bad play. Especially like if you're a bigger fund, you get access to stuff that normal people wouldn't. Because that's my problem with the AI stuff. Like everyone knows that that's a bullish thing, but how the fuck do you invest in it? And that's why Nvidia is going so crazy. Because that seems like a pretty straightforward to invest in it, right? Like
big,
it's the one
public,
thing, yeah, it's the one thing where people feel like they're actually buying something that makes sense in regards to AI. So that's an interesting one.
You see, Kathy Wood like sold the bottom on this thing.
Oh yeah, I'm not surprised.
Yeah, she's pretty terrible, man. As far as her timing goes on many of these things. I mean, I'm gonna bring up ARK. I said I'm not going to, but it's like watching a car crash. You can't look away. I mean, look at this ARK ETF. That chart is. There's your real Wall Street cheat sheet. Minus the bounce.
Like Tesla's up a shitload. Like all of this stuff that she's supposedly bullish on is up a shitload. I'm fucking ox.
It's because I think her timing is fucking awful, and she was also holding a ton of garbage and was sort of averaging on the way down.
Yeah, well,
yeah. Bless up, Kathy. Keep shilling the tech.
Yeah, we need to make something like this because I mean she's getting paid a shitload. The volumes on this thing is fucking insane.
Yeah,
and apparently you don't have to do anything good. And I mean I'm
down to do nothing good. We do that already. We do that every week.
We're already experts at that. You don't need to learn anything new.
Oh man, thing is, you're right because people think, oh, you're like managing money, so you have to like beat some benchmark or beat the indices, etc. It's like, no, not really. Most of it nowadays is sort of just optimizing for AUM, and it's more a marketing and a fundraising operation, and then you just fucking live off the fees, you know. Unfortunately, that's how a lot of that sector looks. Maybe it'll change, but it's unlikely to. Last point on this AI thing I found quite funny. The block does have a subsection here saying, can crypto and AI work together? And it talked to some people. And here are just some quotes, right? So Jeremy Allaire, the co-founder and CEO of Circle, here's his quote. He was already hearing about, quote, AI bots spinning up on-chain wallets and using USDC. So like I don't even know what that means. I'm not sure what the argument is there. I'm not sure if that's an argument for synergy or if that's something to be worried about. How are they using USDC in any meaningful capacity if it's like an AI? Surely there has to be some sort of KYC'd entity somewhere along that chain, right? I mean, maybe on like a DEX and it's, you know, going through like a curve pool or something. But at some point, that has to hit like a, you know, there has to be KYC at some point down that chain is what I'm trying to say. It's not entirely clear to me how an AI bot can like autonomously do all this stuff, and even if it can, that doesn't look great for Circle, right? I'm not sure why he's saying that. Then there's another one also from him. AI and blockchains are made for each other. Already a suspicious statement. And then here's just a bunch of words, Don. Provenance of data, machine-generated and enforced contracts, and machine-to-machine value exchange. Like, does that... Am I supposed to think that means anything? Now, maybe he has some developed thoughts in that article, but it is part of a broader trend of people are so desperate for crypto and AI to mesh, they'll throw a fucking typical word salad at it and hope that something sticks. There's another one from Bitwise CEO. AI may be a catalyst for crypto in this cycle, feeling increasingly convinced that these two disparate technologies are going to have intertwined futures and that crypto is going to become a lot more important as AI starts to proliferate. I'm just not sure. Like, maybe I'm completely wrong, and it's obviously early days, but I feel like a lot of these arguments are made very loosely, and again, out of a sense of urgency that they're in the wrong fucking bubble, and it took OpenAI, like, a few years to make a product that crypto has been trying to make for, like, 13 years, or however long it's been, you know?
Yep.
So as far as, like, consumer-facing apps, We've had a mega head start on these guys and most of tech, and we're probably in last place. So yeah, not great. But we'll see. I'm very much open to having my mind changed. I think AI is cool. I'm just very suspicious of people who immediately try to make anything that's cool in tech or in the world somehow be bullish crypto. I don't trust those people, Don.
No, like what you do with them is just basically realize that their opinion is meaningless, right? Like anyone that will just give you one side of the coin, that opinion is completely meaningless. And it's something that people, I think, usually learn the hard way, right? Because it all sounds great until you get your first minus 80% retrace, and then it doesn't sound so great anymore.
Because if
but
anything,
they don't care.
yes.
Like that's the thing. Like they don't care, right? Like the pumps of this world, right? Like if the coin goes down 80%, they still make their money with their podcasts. And there's zero repercussions for shilling people anything in crypto at the top. If anything, that's how you gain the most followers.
Yes, correct.
So given that that's the case, I tend to kind of take their opinions with more than a grain of salt.
That makes sense.
It's just useless.
If anything, the counter argument is more compelling. That like crypto was a tech bubble, and now there's new tech, and it's already sort of from a consumer-facing point of view and a product point of view far more compelling than crypto. And so there's a chance that there's only so much liquidity, especially in this macro environment, which isn't like zero rates, that's going to siphon off some flows. If you're going to speculate on tech, in the past, maybe you're punting like GBTC, crypto, Web3, whatever type of metaverse shit, but now you're going to be looking for AI exposure, and so the pie got smaller. Like, I think that argument is, in its current form, much more sort of substantiated than a lot of the AI blockchain so-called resonance we're hearing at the moment.
I do actually very much agree with that.
Yeah, so we'll see. Binance enters NFT lending space, starting with ETH loans. The feature currently supports ETH borrowing against quote-unquote blue-chip NFTs such as Bored Ape Yacht Club, Mutant Ape Yacht Club, and Azuki. And Doodles, according to an announcement. The current interest rate on NFT loans is 7.9%, and loan-to-loan value ratio ranges from 40 to 60%, and there won't be a gas fee or Ethereum transaction fee charge. I guess we've kind of decided as a market to go down this road of further financializing NFTs. We now have like proper perps and liquidity pools for them. Obviously, lending comes with that, and it just seems like you're getting a shit version of trading coins, just with pictures, to quote Kobe. And yeah, I don't know, man. It just feels like if you add an element of like speculation, in this case, like an element of leverage. Don't do it to things that you love and cherish, because they will ruin those things. And I feel like, especially given the NFT participants, on average, are far less sophisticated to market forces and trading than virtually any other crypto cohort, which sounds like a scathing criticism, but it's actually a compliment as far as how good, how well NFTs operated as a moat for getting people into the crypto space. Like, we had to learn the hard way on like altcoin, shitcoin order books and like getting PvP'd and dumped on first cycle, like from the trading point of view, to get into crypto. But for a lot of people, it was just like pictures, community vibes, Discord. Didn't really have to learn how to trade. And so that if you start gradually financializing the things these people hold and how they participate in the space, just like we got shafted first time round, I feel like introducing leverage essentially to this is not going to treat the average holder particularly well. Just makes it very financialized, very adversarial, and leverage equals losing money, essentially, I think is the true calculation for most people. What do you think?
Yeah, actually, like I'm roughly on board with that. The whole NFT space is like, I don't know, like always confuses me. So I'm just like, every time I go in there, I either lose money or crypto.
Or you get diluted by Trump.
Oh, dude, that was the saddest thing on the planet. Like, it's always stupidity whenever I go into.
It's also so pretty. Like, you got grifted by Trump. Like,
I cannot believe I got scammed by fucking Trump. It's insane.
How else was it going to end?
Fair enough.
Where were you on January 6th, Don? That's all I want to know.
I mean, the thing is, like, I was just like, I was expecting some form of like brains in that whole operation.
Oh
Because
god, yeah.
it's like if Bitcoin, like if Satoshi came back and was like, hey, I made Bitcoin version 2, and it's like you can trade both now, like that would have completely killed all of it, you know? Like I mean, whatever, it's what it is.
Don storming the Capitol next January 6th. Like, I have a trading card that tells me I get to see Trump, and he's still the president because Biden is a puppet. You know, oh god, that'd be so funny. But yeah, that's the NFT thing. Still hilarious. That you got trumped, but hey ho, thanks for playing, right? You're like his election exit liquidity, essentially.
Yeah, very funny that I lost 70,000 euros. It's what it is.
Here we go. Cybersecurity firm claims it hacked a seed phrase from Trezor T hard wallet in possession. So basically, they got their hands on the Trezor and could extract the seed phrase by having access to the device. So this is just as a reminder to the impossible discussion we tried to have on how to custody your crypto assets. And the answer apparently is you don't. Ledger's going to sell your shards to the feds if they get subpoenaed.
I just want to say it's the most fair shit last 10 minutes. Oh no.
It's okay, we started off strong, right?
Where have we gone wrong?
You know the yearly candle still doesn't have a wick, Don. Has anyone told you that?
Oh, just stop it.
But you're not allowed to hold crypto, which is bearish, I guess, because you have to sell it. But yeah, no, like the custody problem is still fucking impossible. And again, we spoke earlier on how like AI and OpenAI specifically with large language models and all the tools and extensions and apps being built on top of it have already made a lot more progress, it feels like, as far as from the consumer facing point of view than crypto. And then if you look at crypto again, like over a decade later, even something as simple as, hey, these things, how do I hold my own coins? The answer is apparently like you can't / you don't / it's very hard, and there are big trade-offs and flaws with everything, which I guess maybe you could argue is inherent with self-custody, but it just seems like we should have done better in 10 years. Like the fact that people are giving their apes away to get animated, or like signing contracts where it's not clear what you're signing and your entire wallet gets drained. Like that sort of stuff just seems so pedestrian, given how long we've had to come up with good solutions for these things and how much money the industry has made cycle to cycle to cycle. It's just a bit of an embarrassing position to be in. So yeah, as always, like what you do with your coins, you talked about it last week with like air gap laptop. But even then, you have to spread your kind of counterparty risk and your insurance policies with these things, right? Like have some paper wallets, have some hardware wallets, even on an exchange, if you trust it and it's secure, and yeah, even then you have to spread it across exchanges, and your trading stack is separate. Like the whole thing is a massive fucking pain in the ass. And it just sucks how we can probably have this conversation on Casual Friday in like 3 years. God help us if we're still doing the show. And probably still be in a similar spot with people getting phished, hacked, scammed, and custody still sucks, despite it being more important than ever.
Yeah, I mean, if you listen to this episode, what do you do with your crypto is literally just sell it. Oh man, this was like
you sell it, take it to your bank, then your bank gets bank run by Twitter influencers. Like nothing is safe.
Nothing is safe. Nothing is sacred anymore. Either.
Yeah, we're starting an ammo and survival podcast after this. Like, call it Don's Castle.
No, there's not enough space for all my followers in there. Only the ducks are allowed.
Only the ducks. So yeah, I mean, there's no witty, intelligent follow-up to this. It just sucks. Everything has trade-offs, and the shitty part is a lot of those trade-offs are just unknown sometimes. And,
oh yeah.
So you just have to be lucky and manage your risk, I guess. Classic
then
influencer
again,
speak.
Then again, I'm as dumb as they come, right? I'm the
True.
massive idiot.
True.
I've been in this space since like my first transactions have been like in 2014, I believe, like with Dogecoin. And so far, the only money I've lost to anyone has been me sending my crypto to the wrong address and then losing it. So I don't know how people keep getting hacked or like whatever. Like it seems pretty hard to do because by God, I've tried.
Thing is, Don, people like you tried to come off as like a humble person in how you form the statement. Like, I'm really dumb. But what it ended up doing is actually calling those people mega dumb, because the claim ends up being, I'm so dumb and I don't get scammed. Therefore, if you get scammed, you're like off the charts. moronic, which is funny.
I think just in general, like, as long, and this might sound like stupid as well, but like as long as you just assume that everything is out there to scam you, as long as you have crypto, you can't really go wrong, right? Like, anytime I touch my hot wallet, anytime like I send stuff or whatever, I'm just like, my head is in the mode of, okay, there's a million people sitting out there to scam me. I'm just not gonna do anything like more than like more stupid than I already am doing every day, and that has seemed to do the trick. But I'm like, by far, like, the thing is, like, with IT stuff, like, I'm just not really good at it. It's not really too interesting to me. So I mean, like, legit, there's people that work with computers day in, day out, like, that code, that get like fucked left and right and center. And I think it's just because they feel too familiar with it.
Yes.
Like, at some point, you just have to have some respect. Like, you have a bunch of money on a wallet. I assume like that you're holding your wallet with like a couple $100 bills in the poorest parts of like whatever country that has a lot of crime, on the street,
El
open for all
Salvador.
to see. Yeah, and as long as you're going at it from that perspective, like, you should be good on most parts, even if you do the most like even if you don't air gap, even if you don't like, usually you should be fine, unless you just get too comfortable, and that is something that you should never do in crypto.
I think there's some real alpha there. That, you know, most people know reasonable security measures. If you don't, learn them. But mindset is actually probably going to protect you more than beyond your technological competence, right? So that, you know, assume everything is adversarial, everything is scammy, and even if you aren't as familiar with the tech, your skepticism and guardedness will go a long way. I agree. My mistakes have also just been sending it to wrong wallets.
Which is arguably like the dumbest thing you can do.
Yeah, it doesn't make me feel better saying that. Thankfully, nothing too drastic.
Yeah.
Crypto project disappears with $32 million of funds in likely exit scam. In unrelated news, Don and I are ending the show and going on a very long holiday somewhere with a non-extradition treaty with the US. But yeah, it's called DF FinTok, and they were offering 1% per day yield. And they just randomly stole some dude's picture and said they were associated with Morgan Stanley. It sounds like a lot of ICOs, to be honest with you. They gained 71,000 followers on Twitter and had more than 138,000 token holders. Just class. This is pretty big. I mean, 32 million. It's like a lot. The issue is, you might think that notionally, given like Ronin Bridge and a lot of other hacks, that it's not as much. But here, the issue, like with so many holders, it's just like normal people getting fucking fleeced and shafted. And then that's the part that sucks. I will reiterate some wisdom here that most yield promises are like pretty horseshit, especially if they're significantly above the sort of risk-free rate in crypto. And there are a few ways you can sort of figure out what the risk-free rate in crypto is. You can just look at sort of credible platforms, including like on-chain ones, like lending services, be it centralized or decentralized, and just kind of see roughly, on average, what you're getting on stablecoins, you know? And if whatever yield product is offering like 10 times that much, or 50 times, or 100 times as much, maybe pause and raise an eyebrow. You could also look at, as I've said before, the sort of annualized basis on Bitcoin futures, to get a rough idea of how much really sort of premium there is in the market, or risk-free ARB, or risk premium more broadly, however you want to define it. In the bull market, it gets pretty crazy because everyone wants to be long, and everyone wants to be long with leverage, and so those numbers get pretty high, and that's why those yield products are very attractive. But if the market's like, if there aren't any fucking speculators in the market, and the futures curve is flat, and someone's offering you, you know, 50, 100, hundreds of percent on dollars, meanwhile the world is like jumping at the chance of getting 4 or 5% via T-bills, like something doesn't fucking add up. Right? So I think as long as you have some sort of like the classic thing of, if you don't know where the yield is coming from, you are the yield. I think that's true. But also you should have some rough baseline model of knowing what the risk-free rate-ish looks like. And if you have something that's several standard deviations higher, it's just probably a fucking scam, you know?
Yeah. I mean, the thing is, like, where the fuck do they get the money from? Like, you know, like, that's as simple as that. Like, no one gives away free money, right? And even if they could give you this yield, what would they have to do to kind of achieve it? Like, it just makes no fucking sense. Like, they would have to do shit with your money that you cannot believe, right? To make that kind of money back, to give
Yes.
it to you. So, like, might as well go on your favorite exchange, Rollbit, and just 1000x leverage it instead of sending it to someone that is offering you a shitload of yield.
Yeah.
Just same result, but yeah, at least you're not sending. I mean, technically, I was about to say, like, at least you're not sending it to a scammer, but whatever. Not gonna go there.
Understandable. Yeah, I think all of that is right. And also, there's some tricky psychological manipulation going on with, like, oh, it's, you know, you might think if you don't think about like compounding and just thinking forward, like, oh, it's 1% a day and 1% isn't a lot, right? Like, I know that sounds really dumb, but these scams are targeted at people with like limited financial literacy, and so if you kind of don't think of numbers in those terms, it may not sound too unreal. And then obviously if you extrapolate that, it becomes very silly very quickly. I just think in general, a lot of the time, these earn, yield, whatever type of products just aren't fucking worth it. Especially if the market's in this state, and then if it's in a bullish state, why would you not want to, you know, you should be fucking speculating. You've got like a 6-month window to make some money before the space goes to zero, you know? Stop being passive. So yeah, those are my thoughts there. And you know, hope the victims get their money back, but crypto doesn't have the greatest track record for that. We talked about this one very quickly. Litecoin futures open interest jumps ahead of upcoming halving event. Is this priced in? Because you've sort of been on and off about, oh, well, putting on the halving trade, then it's hit resistance, I'm done, then the market looks good, and Litecoin's relative strength is okay, and it's got some sort of narrative, get back in. Like, is it one of those things where the closer it gets to the halving, the more reluctant you are to be in the same trade as people who figure out there's a halving like a week before it happens and pile in?
Yeah, the longer this goes, the worse that trade becomes.
It's what we said about BTC and ETH, just the opposite, right? It's like time favors bears here.
Yeah, basically, I mean, this is how it works, right? Like, for bearish events, if they don't play out, that's bullish, and the opposite, right? So, like, a bullish event would be the halving. You have like a narrative. If that doesn't play out, and the closer you get, or like even if it plays out, if it's already played out, what do you have to look forward to? Even though like the halving is like a little bit of a special case, because you could still have like pumps afterwards, just based on the fact that there's less to dump. But yeah, the longer this goes, the more bearish I become. The good thing about the Litecoin trade is that it basically has like an expiration date. So you don't only have like a price invalidation, you also have like a time invalidation, which makes the trade quite easy, in the sense that like you can take a trade and you kind of figured, okay, this and this is my stop loss, because if price goes back there, that's bad. But then you can also be like, okay, if it hasn't moved in 2 weeks, the halving is too close, and it hasn't picked up any steam. Now a bunch of people are kind of sitting in the same position I am, and I want to get out. So like, I like when I buy stuff that is going to move soon, and this is one of the ones that has like a reason to move soon, which makes me more likely to buy it, even though, like, yes, we're getting close to the halving. So
yeah, tail end of at least a short-term headline trade, and see what happens afterwards. Last two, very quickly. Crypto traders flock to DEXs amid Memecoin mania. And the block provided a DEX to SEX spot trade volume percentage that's been going up a lot, somewhere between 20 and 25% at the moment, with the lows being between 5 and 10% in September of last year. I think this is true to some extent, that there is a ton of on-chain PvP speculation, meme coin mania, and because of how Uniswap works, that's obviously where you get the meme coins. Even though apparently nowadays it doesn't fucking matter, because tier 1 exchanges are going to list like Capo as a meme coin, and Mexi listed like LGBT Inu, which I found hilarious because it was like gay Inu as well as gay Inu. Anyway, so nowadays even that value proposition is becoming faded because exchanges are so fucking revenue hungry. They'll list literally anything, especially when the market's like this. So I think that's true to some extent as far as the DEX to SEX ratio going up. But I think it's also a story of like the market hasn't been fucking moving, and a lot of the SEX operators
I've been holding back for like the last minute to make a dumb joke.
A lot of the sex operators are coming to my house after this podcast. No, that's tomorrow. That's for the weekends only. I'm a man of God, Don. What do you take me for? Like we had headlines earlier of like Jump stepping back and all these other market making firms just taking a fucking breather, and just in general post FTX the market's been lower volume. So I don't think it's purely a case of just a migration from decentralized trading to from centralized venues to decentralized venues. I think it's like short-term meme coin speculation is better suited in dexes, and also just the normal sex participants taking a break essentially, or just fucking off from the market. And so those two things put together give you that percentage. But I don't think it's like a clear story of, oh, finally crypto people understand that self-custody, etc., is the way to go and everyone's going to trade on chain now. I think this is quite a short-term phenomenon in sort of a perfect storm, if you will. So what do you think about sex and dex?
I mean, the sex volume is clearly trending down in crypto.
In my life too, Don. Like that thing's not moved in fucking ages.
And I don't think that's gonna necessarily revert.
Agreed. Oh, yeah.
Like I think that's gonna stay for quite a while. Just as long as you have the decentralized exchanges getting better and better, I think that would actually, like, I would expect more and more volume to be there, especially given how much like the traditional exchanges take advantage of their users, right? Like it's just if you look at the fees that they charge, if you look at like kind of how they operate, it seems very it's cutthroat and it's quite aggressive. And I think if you can kind of make it so that you cut out the middleman in that regard, like that'd be quite cool. So far, I mean, I like to trade on centralized exchanges more so than on decentralized ones, but I like the movement, and I like that we're getting a little bit of diversification, especially given that in the centralized world we basically have Binance and almost nothing else. So
yeah, well
like
said.
the more the merrier, especially in this field, because if it's just one, they can do dumb shit and get us all killed basically.
Yeah. And you should, I think, be able to use both, right? Like ideally, because a lot of spicy stuff, especially if you want to go to places with less competition, it happens on chain, and so you should at least have the capacity to trade on both. And it is quite different. I mean, some of these dexes are designed to look a lot like centralized exchanges, but it is quite an experience if you've never done it before. But you should have the, I think, ability to do both, because some trades on there, by the time they make it to the centralized exchange, are mostly done, you know?
Yeah, I think like all the meme stuff.
Yeah, pretty much.
If you can trade meme coins on a centralized exchange, I mean, you're gonna get fucked.
You ain't got that long left. Yeah.
Yep.
Last one. Justin Sun wants to revitalize Huobi and Poloniex with meme coins. Two notes on that. One is I just think he's too late. And the second is I don't think Justin Sun, in my personal, honestly held opinion, I don't immediately associate him with novel and original ideas. I'm trying to phrase this very fucking carefully. But he if he were a trader, I think he'd be more of a trend follower, if I can put it that way.
I mean, he is a trader. He's actually like...
He's an amazing trader. He's actually a fucking awesome trader.
Yeah.
He's also like... He was also all of like Aave, like the entire Aave book. During DeFi and stuff. But I just think as far as his...
I got to run real quick. Be right back.
Yeah, no worries. So, yeah, if you look at how... I mean, the very conception of TRX and Tron, there were allegations of it being heavily lifted and sort of plagiarized. And the same with how, as soon as the AI bubble came around, he had this thing that TRX is going to have an AI fund. He tried to buy Credit Suisse. So he's definitely a fan of... sort of putting himself in the spotlight to further his own interests, which is completely fine. But as far as sort of novelty and leading the space, that's not sort of what I associate him with. And I just feel like with the meme coins, especially if you have to move as slowly as most centralized exchanges do, even if you do play it a bit hard and loose, or fast and loose. I don't know what the idiom is. English is a very difficult language. If you play that way with the rules, by the time you get around to listing it, people have been trading it and talking about it on-chain for ages, and then some of the less rigorous, if you will, exchanges have listed it. And so if you have any degree of compliance, you're always bloody late to the meme coin thing. And by definition, most of the time, meme coins are sort of late cycle, short-lived phenomena, with some notable exceptions, more so than like a recurring, consistent, stable feature of market structure. So it's not something you really want to build your business model on, because it's not a permanent fixture, if you will. Happens for very short period of time, very short periods of time. It's very fun, it's very exciting, but ultimately, easy come, easy go as far as meme coin flows, meme coin traders, and the market just sort of rotates way too quickly to make a business model there. So yeah, I'm just saying how, meme coins as a business model for exchanges, the shit happens. It's just, when it comes around, it's usually like Pico Top or peak froth. Most people lose money and fuck off, and it doesn't last for long enough to make it a sustainable source of revenue. It's just sort of almost bending the knee to customers who are feeling like peak FOMO before they fucking lose their money and fuck off somewhere else.
Yep. I mean, that's kind of how it goes in general in crypto. Like, you have these trends, these kind of like odd trends, and they go crazy. And the moment people adapt to it, it's kind of over, and then you wait for the next one. So I'm not expecting that kind of, like you said, that flow to necessarily be around forever. It's going to come and go, basically. I mean, the meme season is not like something that is completely new.
Yeah.
We've had that with Dogecoin, but just in a much, much smaller range than what we have right now.
Yeah, and it had bloody Elon as well,
Yeah.
A lot of external forces there. Long episode, Don. I think we're done. That's all from us. As always, show brought to you by WooX. Please read the bloody article so I don't have to get tagged on Twitter to explain stuff already explained in great depth in that piece. But yes, if you want to support the show, sign up and have a tiny amount on there that you only use for trading. Exchanges aren't banks, and again, all of that is covered. Counterparty risk and the trade-offs and risk management, all sub-articles. Just click on it, and if it makes sense to you, if the trade-off is acceptable in your estimation, give it a go and let us know what you think, and we can tell the team if it's good or if it's shit. That's all from us. Thank you for watching. Leave a like on the video before you leave, and go watch something else, and that's all from us. See you next week.
Bye-bye.